Good morning, everyone. Welcome to the November 17th Finance and Audit Committee meeting. I'd like to first recognize that we are gathered on the traditional territory of the Snuneymuxw First Nation. Our clerk this morning will be Ms. Sky Snellgrove. Today's Finance and Audit Committee meeting will be held in accordance with the Community Charter and Council Procedure Bylaw 2018, number 7272. As the province is now in Phase 3 of the reopening plan, question period has been reinstated for those in attendance for agenda items only. The question period sign-up sheet is on the table to my left, next to the double doors. If during the meeting any member of the gallery has a question regarding an agenda item, please write down your name and the agenda item on the sheet. And at the start of question period, I'll call up those who've signed up to the podium to address council. And the first item on the agenda is the introduction of late items, and we do have one this morning, Ms.
Thank you, Chair. Yes, we're going to be moving question period to follow the presentations.
Thank you very much. A motion for the adoption of the agenda as amended. Moved Councillor Thorpe, seconded Councillor Bonner. All those in favour? Any opposed? None. Motion carries. A motion for adoption of the minutes is circulated. Moved Councillor Bonner, seconded Councillor Thorpe. All those in favour? Any opposed? None. Motion carries. We have no delegations, but we do have a number of reports this morning. The first is Live Fire Training Centre remediation. Chief Doyle, good morning. Don't suppose there's a bag with chocolate somewhere, is there?
There's no bag with chocolates, Your Worship, and there's, what's that? Say again? Exactly, no. And I wish I could be here with a business case like we had last time that was making money. Unfortunately, as you guys have seen the report, we our Live Fire Training Center remediation project, we went out to tender on October 6th. When the tender closed, we only received one bid. And that bid came in at the total cost is going to be $532,000, which is the original estimated cost by our consultant was $275,300. Yeah, so receiving only one submission was likely due to a combination of market conditions, saturated with a lack of available contractors and expertise in this type of work. I'm sure that COVID probably played a big part in it. I know most projects are with supply chain issues and skilled labor are suffering from similarly from this. The city in good faith cannot re-tender the work in order to try to obtain additional prices without jeopardizing the city's reputation and opening the door to legal action. Additionally, redesign the project is not practical and the single submission is compliant, leaving the city the option of canceling and not proceeding with the project or increasing the budget to align with the tender submission received. Additional funds required to cover these costs can be found within existing budgets from other projects completed under budget. Given the magnitude of the budget transfer, specific disclosure is warranted.
Thank you, Chief Doyle. I'm not seeing any questions from anyone. Councillor Martin, sorry.
Thank you. First of all, thank you for bringing other projects under budget. Yeah. And I'm thinking when I was reading this, first of all, that it's now or never, right? We have to move on this. And I'm just wondering, this would probably relate to our budget considerations because this would tie into the training and the new manager's position, et cetera, if you can speak to that.
Through Your Worship, to Councillor Martin. Yes, yeah, it definitely will. Having our training center here and being able to train our personnel without the travel costs and you know, everything from transportation to extra wages to get there, we get to inform the training, control the training, use our experts for that. You know, it's run through Viera. That supports it. Is definitely a big component of it. You know, secondly, doing the repairs, although we don't generate a lot of revenue in terms of just renting out our facilities, but it does give us the opportunity to generate more revenue renting out our facility to external departments in the future. So there are definitely a lot of considerations in terms of running our department and keeping our members safely trained at a reasonable cost.
Thank you.
Thank you very much. I appreciate the report this morning. The next is the operating results for the 9 months ended 2021, September 30th. Ms. Mercer, please.
Thank you, Your Worship. So this report includes day-to-day operations only. Operating projects are included in the report that comes next for projects for quarter 3. So at the end of quarter 3, we are projecting a surplus of just over $1.8 million for all 3 funds. And so the finance department meets with each department to get the projections for where they think they're going to be at the end of the year. And then we compile all of that information and put it into this report. So I'll go through the different funds, the highlights of what has created those surpluses or deficits. So I'll start with the general fund, which has a surplus of $1,321,900, or that's what we're estimating. So the larger items in that are, the biggest impact is the relating to the Rcmp Retropay expense. So as you know, the Rcmp, some of the Rcmp members have been without a contract since 2017, and they have now settled that contract. And we, although we have not received final information, we have received some good indications of what is going to come our way. And we have been accruing expenses for these each year in our financial statements. However, it does look like we're going to be about $3 million short in what we had anticipated to what is actually going to come. Now that we are projecting that we will have enough surplus to cover that $3 million, as we're showing a $1.3 million surplus. So we should know within the next 3 to 4 weeks what that final number will be. But at this point, we're looking like it's going to be around $3 million, but we will have enough surplus to cover that deficit. We have about $1.5 million in position vacancies so there's various vacancies throughout the city. Lately it's been challenging to fill positions as quickly as we thought, given that the market is quite competitive to attract employees to certain positions. So that was a variance of about 1.5 million. We had no revenue budgeted for casino in the 2021 budget due to the pandemic, and with the casinos reopening earlier than we had originally thought, we're getting additional revenue. So we have a projected variance there of about $490,000. So that was a good surprise. Building inspection revenues are anticipated to be higher than expected by about $463,000. Our aquatics operations are doing better than we had expected by about $537,000. Parks and Rec operations is really hard to predict what's going to happen, because the time we do the prediction, 3 weeks later, there could be another health order that comes in and affects that. So we are doing better than we had originally anticipated, so that's a positive. We have unspent health and housing funds of about $427,000 that are contributing to surplus. Our operations at the Vancouver Island Conference Centre are doing better than expected by about $175,000, and that's they have lower than anticipated expenditures as well. And lastly, our Vieira revenues are higher than expected at about $162,000. So all of those contribute to a surplus of about $1.3 million in the general fund. So overall, that's a good news story, because we are able to cover any shortfalls we have resulting from the Retropay for Rcmp. So as I mentioned at the quarter 2 presentations, quarter 2 is a lot more conservative in our estimates. We still have half a year to go, and the summer is often busy. So we were projecting at quarter 2 about a $1.5 million deficit, and now we're sitting at a $1.3 million surplus. So just wanted to point out some of the major swings in there that make up that majority. So the unspent health and housing budget of $427,000 contributed to that. Aquatics being better than we had anticipated by about $750,000. Increased Vieira revenues for fire and some vacancies added about $423,000 variance there. and the casino revenues coming back to normal sooner than anticipated. So those items kind of make up the majority of why we had such a big difference between Q2 and Q3. So we always project on a much more conservative, so we're doing better than we had anticipated. For sewer, we're expecting about a $93,000 deficit. And that's just mainly due to lower than anticipated revenues for water station or pump station revenues, new service connections. And then we have some increased costs for discounts. That's mainly due to extending the deadline, so more people took advantage of claiming that discount on their bill. And we had some contracted services that were over budget by about 30,000. So all of those kind of, and there was some contingency funds that offset that to come to your $93,000 deficit. Water is expected to have about a $622,000 surplus, and that is mainly due to user fees being higher than we anticipated. It was an extremely dry year, more water usage. We're still, people are still conserving, but with it's hotter, you need more water to keep your plants and whatnot alive. We had some position vacancies, and again, discounts were higher because of the extended deadline. More people took advantage of it. So that was the majority of the bigger items for all of these, for these three funds. And so I will open it up to any questions if anybody has any.
Thank you very much, Ms. Mercer. Councillor Bonner.
Okay, thank you very much. I noticed that a couple of meetings ago, when Mr. Corson was talking about the Nanaimo Prosperity and the fact that they weren't using their funds this year and he planned on rolling them over into the next year. I'm wondering why we wouldn't do the same for the Health and Housing Task Force work that's happening.
Through your worship to Councillor Bonner, that is something that Mr. Corson or Mr. Lindsay will have to answer. We did confirm that it was going to surplus, so I will leave it up to them to discuss why we are not carrying that forward.
Okay, I'll reach out to him, thank you. My next question was on the water surplus. Mm-hmm. Would we be in our best interest to not use that to lower the increase in the water fees coming up? Or just, or would we, or I know the taxpayers would probably like to use it to lower the water fees. What is your recommendation?
Right now, we roll that money into our reserves. And so next year could be an extremely wet year and we have a shortfall of revenue. So it's hard to determine when we're going to have a surplus and when we're not. So my recommendation would let it roll to reserves, and that can fund either projects or any shortfall in revenue that we would have. So, I mean, it is an option, but I think the more prudent thing to do would be roll it into reserves.
And I'm fine with that. I think your ability to predict reserves and surpluses is much better than the Weather Network's ability to predict weather. So, thanks.
Thanks.
Any other questions from anyone? Seeing none, thank you for that portion, Ms. Mercer. The next is project results for the 9 months ending 2021, September 30th. Please.
Okay, so this report shows the status of operating and capital projects at September 30th. So we have them broken down into categories: completed or substantially complete, in progress, not started, or delayed, or other. So we categorize them into those, and that's how the report is laid out. We have a total budget of $120.4 million, with capital being the majority of that at 102 and operating at 18 million. So to date, we have spent 59% of our budget, capital again being the majority of that at 63. And so that leaves about $49 million in funds still to be spent. And we're hoping to see a bigger majority of that spent by the end of the year. And attachment A will give you a detailed listing of all of the projects and how they're categorized. So unless you have, we'll try to answer any question you have regarding any of the projects.
I'm not seeing any, Ms. Mercer. Thank you very much. Pardon me, Councillor Thorpe.
Thank you, Your Worship. If I may, through to Ms. Mercer, I'm just curious, when projects are delayed, as sometimes, of course, that can't be helped, but in the current climate that we're facing, financial and otherwise, is there much of a risk of significant cost increases to seeing those projects completed further down the line? Costs will presumably escalate, and in some cases, we're seeing dramatic increases.
Right, and through your worship to Councillor Thorpe. So what we're seeing is for projects that we're going out to tender or to bid right now, we are seeing some increases in project costs that we hadn't anticipated. So that some of that relates to supply chain, availability of contractors and whatnot. So we are seeing that. For projects that have already had an accepted bid or a tender, those ones we shouldn't have as much issue with those ones, but it is for projects, say, coming up that we might see some problems with funding because they are coming in higher than we had anticipated. So the answer to the question is yes, but it depends on when, at what point we've gone out for tender on those.
So the projects that have been tendered, we basically have a locked-in agreement, and that will...
For the most part, unless we change the scope or add, that kind of thing. But yes, if the project stays as we've gone out to tender for, they should be within budget, but yeah.
Good, thank you.
No further questions on this section. We'll move on to the very heavy stuff, the council expenses for the 9 months ending 2021 September 30th. Ms. Mercer, please.
So thank you, Your Worship. So this information is compiled all year, and 3 times a year we come out to council and provide you with your listing. So you've all have seen the details of each one of your expenditures. And all this information goes into the SOFI, or the Statement of Financial Information report that gets generated at the end of each year. So I will answer any questions if the report's for information. So if you have any questions, I'll be happy to answer.
And does anyone want to question anyone's expenditures? Let he who is amongst you without guilt cast the first stone. No. Thank you very much, Ms. Mercer.
Thank you.
The bad news is that council isn't probably participating in the things that it could normally would be. The good news is it's saving money. The next is quarterly purchasing report, single and sole source purchases in excess of $250,000 and instances of non-compliant purchases.
Okay, so this report is for the third quarter, and from July 1st to September 30th. So Appendix 1 outlines our sole and single source purchases. So in quarter 3, we had 10 awards with a total value of $520,244.96. And Appendix 2 outlines our purchases over $250,000. And in quarter 3, we had 2 awards with a total value of $1,888,722.99. And we had no instances of non-compliance in the third quarter. So I'll be happy to answer any questions if anybody has any.
Seeing none, thank you very much, Ms. Mercer. The next item on the agenda is presentations and the Kpmg preliminary audit. Ms. Mercer, back to you again.
Thank you, Your Worship. So each year, the city is required to have an external audit of our financial statements done. And our current auditors are Kpmg. So we've just awarded them the contract for the next 5 years. So Kpmg comes on site twice a year, once in the fall. So they were here last week, or virtually in the interim. And then they'll come back in the spring and do a finish off completing the audit, and then we will bring that to council for acceptance, probably in April or early May. So before they start their final audit, they come to the committee and give you an update on what they're going to do. So I will hand it off to Liette Bates-Emer and Sarah Burden to walk you through their report that they have in the agenda.
Thank you very much. Good morning to both of you and welcome.
Thank you. Hello, everyone. Sorry that we couldn't be there today. There's a lot of things getting in the way of us coming up island this morning. So we regret that we're not there in person. We would have liked to do that finally again, see you all in person. But hopefully when we present our findings, we'll be there. We'll be able to be there in person. Also just wanted to say we're also very excited to be reappointed as your auditor for the next 3 years. We're very happy about that. If you can flip to the next slide, please. I'll just introduce our senior team members on the audit this year. So I'm happy to say that we have continuity in all of the senior team members on the audit this year. So myself, Liette, is the audit engagement partner. Sarah Burden is our senior manager. Kayla Hanlon, who has been the senior accountant on the file for a couple of years, is now a manager and continues to work with the staff on the audit. And then Lenora Lee was our quality review partner last year, and she will be in that role again for this year. I'll also just start off by confirming our independence as your auditors and mention that the fees that we charge are consistent with the proposal that we issued this past summer. Next slide, please. So at the planning stage of the audit, we discuss our materiality with you. So, we provide our audit opinion on that your financial statements present fairly in all material respects in accordance with PSAB. So we do mention to you, what are we using as the materiality figure in our audit? This year, we're using 3.7 million, which is consistent with last year. We drive this figure off of total expenses, and we're at about 2.2% of total expenses. The auditing standards allow a range of 0.5 to 3% of a gross benchmark. The materiality figure is supposed to represent sort of the maximum level of error or at the level of error that would change a user's decision when looking at your financial statements. With a materiality of 3.7 million, we do report any differences back to the committee that we find that are greater than 185,000. Next slide, please. So in the planning stage of our audit, we have assessed any significant risks, and the only significant risk that remains in this audit is that required by professional standards, which is fraud risk due to management override of controls. This is not specific to the city. This is a professional requirement and a risk that is required to be identified in all audits. So we address this risk with sort of standard procedures around testing of journal entries, retrospective review of any significant estimates, and then business rationale for any significant unusual transactions where there are any. At the planning stages of the audit, we do inquiries related to fraud with management, and then we are also required to have those inquiries with those charged with governance, which is yourselves and this committee. You'll remember that we annually pose the question related to fraud. Are there any instances that you're aware of or any fraud risks that you want us to be aware of in the planning stage of the audit? Hearing none, I am also available to be contacted, and that's in our detailed report. You'll see our contact information there, and if there is anything that you need to bring our attention, feel free to contact me. Next slide. So our audit approach focuses on what we consider to be significant accounts, and we've sort of listed for you what we consider to be significant accounts in the audit of the city's financial statements. So the tangible capital assets, obviously our largest asset on the statement of financial position, wages and benefits, cash investments, revenue and receivables, and expenses and payables. And we provide just some example procedures or audit procedures that we use to address those significant accounts. Next slide, please. So we do anticipate that, COVID would have had a significant impact on the operations for the 2021 year. And we will be factoring that into our testing in probably several areas of the financial statements, mainly where there's significant changes in revenues or expenses. Last year, you'll remember that you did have a detailed note regarding the impacts of COVID. So again, we'll work with management on disclosures for the city's sort of specific situation related to COVID in the 2021 financial statements. And in the past, I think the last 2 years, we have done our audit remotely. Well, the first year we did a half and half audit because COVID broke the midweek of when we were there. For the 2020 audit, or for the 2019 audit. 2020, we did fully remotely. 2021, we are excited to be able to come back on site at the city to do our year-end work. Kpmg, our firm, has a vaccination policy in place, and we will obtain the proper approvals from your staff and our internal systems on being able to come on site. So looking forward to that in the spring of 2022. Next slide, please. The last thing in our detailed plan, we include details of upcoming public sector accounting standards changes. So we've mentioned for you to have on your radar the upcoming standard related to asset retirement obligations, which will be in place for the city's 2023 financial statements. There's also a new standard for financial instruments that the city will have to adopt for the 2023 financial statements. So we know that management has started the process of looking at adoption of these new standards, and we will work together on those projects. And that's it for me for the presentation here.
Thank you very much, Ms. Bates-Emer. I'm looking around, and Councillor Bonner.
Thank you, Worship, and to you, to our auditors. In your report, you set the materiality at 2.2%. And I'm wondering if that is consistent with other municipalities. I know that nonprofits, they tend to lower the percentage down, and for-profits, they tend to up the percentage a bit. And the other part of that question is, as our budget grows, is 2.2% enough to keep us going? Because, you know, if our budget went up 50% in, say, 15 years from now, that number, materiality, would be in the $4 to $5 million range.
Yeah. So I could say in general that, you know, the materiality that we're using is probably pretty consistent with our other municipal audit clients. We do internally sort of do a comparison on what we're all sort of using. So I'd say that I can kind of confirm that is consistent. Yes, so typically you would see, you know, with a growth in the gross benchmark that we're using to drive materiality, you would see a growth in the actual materiality figure. So if we determine that we're still going to be using 2.2%, you know, you'd see your materiality increasing. Is that what you're getting at there? Yeah,
and part of that is the risk management. Is there a point where it gets too high? Like if our materiality is $5 million, there's a lot you can buy for $5 million.
Yeah, so you know, the materiality is a reflection of the gross benchmark, right? So, you know, there's in, you know, the province of BC financial statements, the materiality is a huge number, right? Which is just like the auditor can't, you don't want to go under the 0.5%, because then you're outside the range of kind of what the auditing standards would suggest. I guess what can provide some comfort is that, like I say, you know, the reporting on misstatements is a fraction of the materiality. So the 185,000 that I mentioned is 5% of the materiality figure. So you are still getting reporting at a much lower level. And also, you know, sort of the thresholds for testing and whatnot are also a factor of or a fraction of the materiality figure. So it's not like we aren't looking at anything that's under that threshold.
Okay, thank you.
Thank you very much. Much appreciate the presentation. I'm not seeing any other questions from anyone. Ms. Snellgrove, I suspect we don't have anyone on the question period sign-up sheet unless staff are filling it up to make us feel better.
There are no members of the public in attendance to ask questions.
Thank you very much. The next item is a procedural motion to proceed